Alright, welcome back everybody. This is going to be open for light and ultimate members because I missed one stream. So today we're going to do Q&A coaching for light and ultimate members. But before we start that, I was just notified that we have managed to implement the anchored VWAP onto the whole VWAP indicator. So I'm going to show you how to do that. I do have my notes here. It's a bit tricky. I'm going to bring out a fresh new chart so that we're not cluttered. Yeah, where are we? Let's do market watch. Then brand new chart. Undocked. Okay. Here we go. Is this a fresh one? Okay, let's bring out maybe an ES index because I know that a lot of people trade ES, never mind crude oil. So maybe do that. Just to make it a little bit more suitable for the market that I'm going to be doing this on. So the first thing to note is that our VWAP will be, you will have the potential to slap on the second and third instance of the indicator, so you can have your regular VWAP, the one that we can use on default settings, either on a session or continuous mode. But then you can add two more that can be your anchored VWAPs, anchored to whatever you want to anchor them to. So I'm gonna put the first one on. Let's just move the chart this way. Jerome says, I'm a happy light, thanks. Well, whenever I miss one of the streams, I'm always like, oh God, I should really, make it up to you guys. So that's what we're doing now. So let's put the first VWAP on. This one just goes on as is. You can have like a continuous VWAP. Let me expand this to the full chart. Then maybe make myself a little bit smaller because I don't want to take up too much of the screen. I want you guys to concentrate on the actual chart here. So this is a couple of sessions of VWAP. We can obviously change that to be just the current session. So I'm going to go ahead and maybe say just NYSE hours. So now this is just the VWAP for this particular session, or you can have it as a continuous VWAP. So maybe that's a setting that most people are using as well. So, there's like a million ways to use it. So let's say we use a continuous VWAP with like the generalized standard deviation bands. And then we may want to anchor one of the VWAPs at the London Open. So I'm just going to look for that. London Open is, I believe, here. So I think it was here, 7 o'clock rather than 8, because this is in GMT. So that's the London Open. So the next VWAP, this is what you're going to have to do. So you will drag the next instance of it onto the chart. Okay, and it appears. The first thing to do, in order for these two not to clash, you need to scroll all the way down. And you need to change where it says instance ID. Because if you don't change that, it's literally just going to plonk on the same thing here and you won't be able to control it. So whatever you change in the original one, this one will change as well. So by changing the instance ID, you're effectively telling the computer, hey, I want to leave the first one as is, but the second one, I would like to change some settings on and mess around with, different levels. So we're going to say instance ID 2, okay? Now also, because this is going to be an anchored VWAP, you now need to change this to be from session or continuous to be single anchored. Okay, so that is all the way back at the top where it says interval, so it's VWAP interval, and then we're gonna find single anchored. All right. The next thing that I'm gonna do is to change the date to current date, to today, purely because I don't want it to start tracking from like a million miles away. I just want it to start tracking from today so that I can see where the hell it is. I also want to change its colors. I don't want it to be the same colors. So first thing, I'm going to change the VWAP color itself. So I'm going to put, let's put red for VWAP, and I'm going to change the standard deviation to solid rather than filled, because I don't want everything painting into the rest of the lines. And I'm going to change the colors too. So let's change orange. This middle one can maybe be gold, and then another orange. All right, so done that, done that. Right, so now the last thing is that I'm just going to check this. So this, scroll all the way back down. There's another area that says anchored click modifier. Now for this first instance of the single anchored VWAP, we don't need to change that, but basically the way you're going to anchor this to the chart is to say click and then click anywhere on the chart where you want. So let's say we click the London start. So now you have this anchored VWAP that is printing a whole set of different lines. Okay. Similarly, you can anchor it for anchor it to, let's say, the overnight high or the overnight low, if that's what you want. You can anchor it to today's low as well, or you can anchor it to today's session high. Very, very handy. So that's now my standard VWAP, and then the second VWAP instance is the single anchored. So now we can add another VWAP to this one in case you want to go VWAP mad and have two anchored VWAPs and use different points on the chart. So I'm going to take another instance now. So dragging that in. And I'm going to go to indicator, third VWAP. Oops, you see, I made a mistake. So I didn't change the instance ID when I dragged it in. Okay, so we have to do that. So dragging it in all the way down, change the instance ID to 3 because this is now my third VWAP. So first VWAP is normal, second VWAP is the first anchored, and this is the third VWAP, so it's also going to be anchored. So I'm going to go and do a similar thing. So interval needs to be single anchored. Then we don't need sessions because that's not switched off, but the start time needs to be today. Then standard deviation bands need to be changed as well, but for this one I also want to change the color of the VWAP, so let's say turquoise. And the colors for the actual standard deviation bands need to be changed as well. So let's go blue themed this time. Maybe deep sky blue, blue, and deep sky blue again. Style line is solid. Now, in order to have this one work separately to the one that I've just done, you need to change this anchored click modifier at the end of the whole inputs parameters. So you can't have both of them on control, because control click is anchoring your second VWAP to wherever you click. But this one needs a different modifier, different click modifier. So let's go shift. So drop down menu, shift. So now when you go shift click, so let's just place like a random thing. There it is. So that's your third anchored VWAP. So now shift click will change the third one. Control click is going to change the second one that I've given you. And then you have your original one. Okay, so we managed to do it, guys. It is there. You actually can. It's a bit of a fumble, you know, whatever, but very highly functional, very optimizable. You can put all the colors that you want. So yeah, I think that's going to be very useful if you use that. All right, so now that we finished with VWAP, why don't we go back to our charts to see what the hell is going on. I had some idea for a crude oil trade, but I'm still waiting. Where is that? And let's move back to the other scene because it's easier. And now I'm gonna remove this particular thing here. Just lost some money. All right, so where are we? Let's have a look at the larger time frames on crude oil first. Right, very large weekly candle straight into the area of a demand. Now this demand on a weekly chart is pretty deep. It's very deep. 3 TPOs below the initial balance. Okay, so for now that's not giving me too much confidence that this is going to go into a failed auction, but again remains to be seen. Let's look at the profile and 4-hour chart quickly. Okay, arriving into the continuous line on a 4-hour chart. When was this made? This was made yesterday for London. So might react. London does tend to have a fair amount of volume. And right now the sessions are not that dissimilar in size. So yeah, could have an auction fade of some sort, maybe a hybrid auction fade and failed auction. What sort of levels do we have? Where is the ADR and ASR? They're both around the same area. Okay, but we definitely have a trend down. However, we now know that we're coming into an area of a demand, so going in at this point with the shorts would not be the best choice. So we're gonna wait and see what happens there. Maybe if I can join this on at some point from the initial balance low, that could be an option. Right, so let's do some hypos. Don't seem to have sticky notes on here. What's going on? Yeah, I saw that, Jeremy, but right now I am I want to do the analysis of crude oil, then we're going to move on to gold, and then we're going to move on to the plans. Sticky notes, where are they? There they are, okay. And there we go. Okay, so first hypo, crude oil. No, not working. It's because I have two. Why do I have two? Why is that not working? Left bracket. That's weird. Okay. It is working, it's just black. I can't fucking see it. Okay, great. Yeah. Very bright lights. What is going on? I said font color white. See, I used to have white charts. You guys know that. So now I'm on black charts, so some of my default settings are a bit messed up. I'm gonna re-drag these sticky notes. It looks like it's clashing with itself. It's a bit confused. So this is also why we like to make our own indicators that don't clash. And no, it's still not doing it. Okay, very interesting, but I'm gonna change the color of that anyways. Right. So first choice would be ADR, ASR low for maybe a hybrid auction fade slash failed auction. Why? Because usually auction fades during post NY cut period, they tend to be a bit limited in profit margin, meaning that they turn around not too far away from the initial balance. So because of that, maybe a better choice for this sort of a trade, hybrid trade, would be to utilize the VWAP area or a supply and demand if there's any visible. We don't have any of them visible, it's just a straight move down, which is fine. So second choice for hypo would be I'm not too keen on the actually getting long after, like too long to have two longs after the value acceptance has been completed. But we are far enough away from value to warrant maybe an auction fade as well towards the end of the day, especially if this keeps falling and kind of overshoots, and then we are much lower down. But I do need some alternatives for shorts in case the market just carries on. So I'm going to explore some lower time frames to see if there are any obvious supplies that we've made. There is one supply in here, but it's not really that great. It's more of a speed bump, so I'm not really liking that. But one area that we might be able to utilize is this area here, because it seems to be overlapping quite a few candles. So you see that? That might be like a little opportunistic trade. It's purely based on looking for a speed bump inside the profile. So if we want to do a short, there's a couple of options. This would be one. The second one would be somewhere near initial balance low, which is a more normal thing, but I'm not sure we're going to get that all the way. So this is why just taking advantage of a very large candle. Also, if we get a test of this area here, maybe even bigger, so maybe even this whole area, that might be an option for continuation trade. So if we test that area, we might want to try and see whether there's a little sell-off again, and that would be your opportunistic trade. Not going to be an easy day at this point because the market is just dropping and dropping and dropping, so that always requires quite a bit more skill. So initial balance low or speed bump on profile for joining, let's say, short. So again, patience required on a day like this. Let's go up. Maybe move these here because I can't really see what I've written. All right, now the third choice here was this value acceptance that happened at the start of the market. Obviously, I wasn't in on that, but it was a choice, so I am going to put it as the third hypo. And then if this had bounced away and if we didn't have a short, the fourth hypo would have been some kind of a reaction from value high. Obviously, that hasn't happened either, so I'm not going to put it at this point, but this would complete the four major setups. So you can see that this one happened here, obviously, so that's gone, and we are losing ground very quickly. All right, so let's park that for a second, and I'm going to have a look at this GC that Jeremy's mentioning. increase candles, but also go back to the weekly chart to see what is going on there. Attempting to create a morning star. Where are we now? We're Thursday. So tomorrow, if this whole thing holds, we may have a continuation of that, but we could also have a test of the conterminous line. So it's not really telling me all that much. Bearish engulfing area here as a reactionary area was not respected. So we are back to the conterminous line of the previous reactionary area. So now this is looking like more of a phase 1. And that puts the phase 4 from a very large time frame on the monthly and the weekly charts to like on schedule for a bit of a break, a bit of a pause. 4-hour chart, yeah, very, very strong move. I can also see a potential of this being P-shape, so I wouldn't really, yeah, I would probably be looking to join this auction higher than going against this very large, quite forceful move. I know there's a bit of a pop in here, but if you look at the overall shape of it, this is still have like it has a huge potential to become a P-shaped day, and that means shorts are a bit dodgy to be doing. So because of that, I'm going to put some weight on the longs in the hypo and only maybe do a short if I get a really, really strong pattern, which I'm not really seeing here now. This is all just a little bit wishy-washy. So first hypo, is going to be joining the sustained auction. From initial bounce high. So that will be one good choice. Why? Because we now have the market that has jumped away quite significantly from VWAP. So this is how you would use VWAP to maybe scan for a better trade location. And here you can see, this is the reason why I don't really use VWAP much, is because it always kind of lines up with something else that I already see as a potential area. And here, there's an initial bounce edge exactly where VWAP is. So it's basically one and the same setup. But yeah, that would be my primary choice for a trade location. Another option would be just to wait it out until the lunchtime reduction in volume gets a little bit less quiet, and then just to see whether they are pushing it higher, and then to actually go higher with this idea of a P-shaped day. Now, this top part, the range where we have now kind of settled into, is 55 ticks. So it's very likely that we're not going to be getting like 2 hours, 3 hours, bazillion hours, but we could squeeze out like 1.5 hours. So that would be my second choice here. So this is also joining the sustained auction. So it's like a continuation from post-downward cut range, because of a P-shaped day potential. And also because of the assumed morning star potential as well. So yeah, okay. Next, as a last resort, if we don't move anywhere and we get pretty late in the session, maybe faded, maybe do an auction fade. So from this average session high, to initial balance edge. So auction fade short. And I don't think I have another setup here. The range is a little bit too big to turn into a proper neutral day, because the initial balance is 127 ticks wide, so we would need to fall from here 58 ticks and then another 187 ticks, so falling 57 ticks and then another 127 ticks and then making a neutral day. So yeah, that's a lot to ask. So I don't think that's very likely. So neutral day strategies I don't think are actually that appropriate for today, even though it is an inside day. So yeah, that'll be me with my hypos. All right, Ray has joined us. I can see that. All right. Huge jump off the cliff here for crude oil. So yeah, patience. If you haven't traded yet, patience is required. I am chilling out a bit this week still because of the Crikey situation. So don't know how many trades I will be doing. Maybe I'll get involved, like one or something. But yeah, so basically these are my hypos. Let's have a look to see if we can do some reviews of plans. So guys, if you want your plan reviewed and you're not a gold member, send it to me to info@marketstokers.co.uk. I'm not going to mention the name. I'm not going to put you on the spot, so it's going to be completely anonymous. Nobody's going to know that it is your plan. And then we can see what's happening. And if not, then someone is going to have their plan on here, one of the lucky gold members. If everybody's really shy today. Actually, let's start with that. I'm going to drag out a YM chart. So these these next few hypos are done by somebody who's just joined us, right? So literally first week posting plans, right? So we can see what the quality of those are like kind of like where we're starting from. And this particular trader likes YM for now, so we are observing that as a potential. YM is opening inside value, but the price has jumped away from value already, hanging above VWAP. Okay, let's see what's going on the weekly chart. Bullish engulfing, that gives us a bit of a bullish sentiment here. Daily chart about to run into a supply, but we still have about 74 ticks before that happens. What are the ADRs doing? Very far away for both. Okay, that's cool. Right, so inside day. Inside day on an equity index doesn't quite carry the same connotations as maybe some other instruments, even though there's always a higher incidence of neutral days, so that remains a possibility. However, because of the bullish engulfing, that tends to change the probabilities a little bit. That's where trading gets a little bit more complex. However, when it comes to hypos, this new trader is actually doing okay. But today we've had a couple of issues that have cropped up before for many other people. It seems to be the recurring theme with this typical mistake. So let me get that out so we can read. Can you guys read that? I don't know. Hopefully you can. I've got the preview here, so I have no idea what the quality of the video is actually like. Let's have a look. Yeah, okay, the quality is pretty good. Yeah. YouTube seems to have sorted out my they sorted out my channel. Okay, so in this scenario, so for YM, the trader says scenario 1, failed auction short. I would actually agree that that is a possibility here, because we do have an inside day, and inside days can act as kind of elastic bands on both sides of the initial balance. Right now we only have an extension upside. One problem that I have with the failed auction potential here is that we don't have a good level to bounce from it. Usually if you want to do a failed auction, you will have a high probability level there. So if you don't have a level, the failed auction can still go through, but I will be a little bit more skeptical. Scenario 2 for this trader is a sustained auction long. I would have probably done something like a SEEB over a sustained auction long. Why? Because we have an inside day. So inside day can change the type of the auction that we can have, and even though some of the inside days go on this mad breakaway and just carries on, a lot of them do end up doing pullbacks, a lot of pullbacks. So that's why something like a SEEB setup would actually be pretty good. And you can even see on this pin bar, let me go into the bigger screen here. You can even see on this pin bar here that that's exactly what happened. So it kind of went down straight to settlement and it went all the way back up. So that's what I'm saying. So that's why SEEB would have been a better option, because we also have a little conterminous line here, and upon the market leaving the value area, because that's what's happened, we had an open inside value, then the market broke away from it. You can have a test of that initial demand area as an area of interest. There's also value high somewhere there. Now scenario 3 is that it's value high reversal long. Now I know that the trader is new, so they probably still don't have all the terminology right. So basically this would be a SEEB setup. So she does have that in there. And that is but I'm not sure whether the trader meant, oh yeah, you use value high as a high probability level, because with SEEB, it's not the value high, it's actually the fact that there's a demand there. So I'm not entirely sure how much understanding we have for this particular implication. Like, it is a good scenario, definitely a good scenario for SEEB. Value high today, again, not as doesn't carry as much weight because we didn't open outside of value. Whenever we open outside of value, value high and value low from the outside tend to be super strong, very high probability reversal levels, okay? But today, we don't have that. We have an open inside value. The final scenario is the mistake that I'm talking about. So we've had this so many times with whoever has managed to submit a plan. At some point, they had the value acceptance trade on an inside day. So let me repeat this. If it's an inside day, there is no way to have a value acceptance yet again, or to have a value acceptance that happens after the price moves from value, then comes back to it. That is not the value acceptance. We still have an inside day. The price were already accepted at the start of the exchange trading. That doesn't change. You can't then suddenly have yet another value acceptance, okay? So value acceptance on an inside day, invalid condition. Another reason why that might not be a good choice is because you have, today in particular, you have the whole initial balance lower part already through the value area. So if we get into value acceptance, which is not valid, you will be increasing the probability of this market basically not really going anywhere. So just running out of time. The volumes, you know, they can increase towards the end of the market with this particular product, but a lot of the times on an inside day, those kind of days tend to end earlier. So you don't really have much going for them towards the end, just before the market closes. So that's definitely a danger. The entire initial balance already being inside the value area, that's a bad sign. So even if you had a day, like let's hypothesize that we have actually opened outside of value and then the initial balance got created around the value high and through the majority of the value area, that also wouldn't be a good setup for value acceptance. And in fact, for me, that would probably mean the value high is being reactive. So there's like the location of the actual zone to consider. So again, it's a really good trading plan for somebody who's only started like literally a week ago, but there's definitely areas for improvement. So we need to take the open sentiment into account, understand the implications, understand the weight of the different levels. For example, on an inside day, any kind of reach of the average session and daily range doesn't necessarily bring a reversal. Ideally, you need to have some kind of an imbalance on the day, so open outside of value in order for those levels to work out. If you have an inside open, if you have a large initial balance, which we don't today on this product, but you know, a responsive activity day would also mean that we have the the possibility of a sustained auction, failed auction, that all stands, and the neutral day. But the responsive activity day can also appear with a very large initial balance. So we have to take all of that into consideration. Jeremy's asking for crude oil. There was a value acceptance. After a value acceptance with a break of initial balance flow for a sustained auction will be valid after a well, no, this is why I didn't go into it. So one of the problems with looking at things after the value acceptance has been completed is that your setup is done. So you need to wait until some other levels are established. Like you can maybe guess that it's just going to keep going, but for me that wasn't that great of an option. First of all, I was looking at something else. I was looking at VWAP and anchored VWAP. These types of days when the market just drops and drops and drops and drops and drops, they're actually very, very difficult to catch. They're not the norm. And they are, you know, they don't have levels where you can actually catch it without guessing. And I don't like that. This is why sometimes if I catch a trending day, that will be because I was in a trade prior, usually from like a value high or value low reversal, and then you kind of keep going. So this was a value acceptance. I have mixed stats on trades that are banking on a breakout of the initial balance once the whole value area acceptance has been completed. If the value acceptance is happening simultaneously with the break of the initial balance, so we have the initial balance somewhere up here, that's fine. In that case, you can do that. You see how it's like case by case? It depends on the location of the actual initial balance, value area, current price. Literally all matters so much. Now that we've had a massive, massive jump down, one thing that could happen is for the price to execute a single print fade back the other way. Because these big candles, they do have a higher incidence of going into a pullback. Just trying to see whether this is a purple line or not. These lights are very bright. I'm not sure whether that's a purple line. I'm not sure. I think that's just a normal cell. But on this chart, it looks a bit strange. I need to change the colors of these. Let me do that. Because I haven't changed my better volumes colors to account for the darker side of things. Orchid. Down. Red. Okay, yeah, so it's just a red candle. Yeah, and another thing, when you have Blahtech better volumes showing you the red candle after a massive move, I've had some people trying to jump into that afterwards, and the stats on that are not that great because most of the selling is already completed. So it's actually better to try and fade this because we've gone over every single area that we might have. So now we have to default back to the higher time frames. For our chart, some older demand and then a continuous line inside there around S2. I mean, in a perfect world, that's where I will be doing an auction fade. Now we might get there. So I'm going to put a little rectangle there as an area of interest. What's the time? Lunchtime, okay. Yeah, so the idea of shorting from this area is still there if we can track all the way back up. Okay, let's do a trade. I'm in. Random prices from a million years ago. I have so many tabs open. I've been doing the course, I've been doing graphics, I've been been editing videos today, so yeah. Million things open everywhere. Probably still have those stats open from yesterday. Yeah, here they are. Luckily, my computer can handle it. Right, so let's see whether the reversal can happen. 2-minute chart, there it is. Strong 2-minute chart. Reversal. I am going to use a slightly bigger stop loss here because I don't want to catch the round number. So we have nearly 400 ticks today for the range, so we can't be using 35 ticks on a day like that. But we can use up to 60 ticks, and because of that, at some point I might actually cut this. I mean, I trade with a very, very low risk anyways. I trade with like 0.3% risk of my account. So, you know, I have I could trade larger, it's just it annoys me when I have to scale out constantly. So I just kind of keep it at 20 to 40 lots usually. Right, so let's see how that works. Yeah, Jerobi, weekly levels cannot be used for trading intraday. They are there to just show you that there's a possibility for a rough stoppage at some point around that area, but whether you stop at a conterminous line, whether you stop in the middle of it or at the very end of it, it's too big an area for intraday. So this is why, in my methodology, any weekly and monthly charts are only there as a loose trade location. Most of the time, we're only using them to come up with just a directional bias. So not going, oh my God, there's a conterminous line, I'm going to go in on a 2-minute chart from there. That will never work. It will never work. So, but a multi-time frame analysis, being aware that there is a demand there and that we're arriving into it, and that possibly if the market gets there on the intraday level, so you have the ADR exhaustion, or you have, I don't know, some kind of an overnight, or maybe London level for crude oil, and then you match it with the intraday setup, that is actually something that you can do. But not without all of the other supportive factors. We cannot trade from intraday, from weekly levels on intraday. Now if you look at this setup, I'm about to upload the lesson 2 from VWAP. I think it's done rendering. Is it done rendering? Yeah, it's done rendering. Okay, that's nice. So yeah, when I upload the next lesson, there is an actual trade that I was doing similar to this, but it was at the different part of the day. So now let's see whether the VWAP mean reversion, which is what Ray likes to do, can actually give us the trade back to VWAP intraday for lunchtime. So let's see whether that rings true. Again, we have several things happening here. We have a 4-hour area that's been touched. We have a 4-hour, I believe there's a 4-hour Q low here as well. I'm on a weird time frame now. So H2 Q low also there. Just touched, and then the price is kind of reversing from it. There's a time of day component. If you remember, I showed you some stats, so I'm going to drag those out again. So lunchtime reversals and lunchtime fakeouts have a 50% of working out. But sometimes those lunchtime reversals do carry over into day range fill, so they just kind of keep going. The bigger the candle that gets to the area, potential area of interest for this mean reversion, the higher the chance of the market pulling back. So this is why this trade actually makes a little bit more sense. If I didn't have that massive candle now, I wouldn't be going into this trade. So it is, again, a case of a number of different conditions playing out and deciding why I'm going into this. Average daily ranges have been smashed. All of the other levels are not around, so we don't actually have a level for ADR for auction fade from the average daily range, because the average daily range is all the way up here, so we can't use that. But what I can use is the 4-hour conterminous line or a Q low, which we have. So you can see here it's been touched. That's my level. You see, this is what I used to see when I was using supply and demand areas. Like there would be a perfectly good demand there, but I'm like, but why is that reversing there? Like it's kind of reacting to this swing. I'm like, but why? And how can I catch that? It used to annoy me like so much. And then, like I said, one day I was listening to Rent Squawk, and they were talking about quarterly announcements and earnings, and I thought to myself, what if I take the high and the low and I divide it by 4, and then I look at the tops and bottoms as my area of interest rather than just the demand? Would that work? And then I did like a back test. I spent like I think I spent like 36 hours across a couple of days just losing my head in Forex Tester. And I managed to come up with some really good stats. Like literally Q points were reactive to a rate of about 65 to 70%. So I was like, I must tell others. So that's how, you know, that's how Q points came up. Yeah, Jerobi, thank you. Jeremy, I don't really go past 2R. Like I literally, if there's something in the way to my 2R, I might go, okay, so let's just, let's take that into account and monitor it a little bit. But when you have such a big jump away, I don't chase the full return. So if I get my 2R here, that's a 2R, I'll be perfectly happy with that. Even 1.5R. Like I know yesterday was a bit of a weird day for me. But yeah, I mean, you can see the difference, I hope, with the emotional trading yesterday where my head just wasn't in the game, man. I was like spaced out. I was just like, oh, I hope he's all right. I hope he doesn't have internal injuries. Oh, I hope it's going to be fine. And then, you know, you have a lot of stuff playing on your mind. And I just didn't do all of this. I was just like, oh, let's go back to stats. And stats are great for days like that for me. But my head just wasn't in the game with the actual price action that was happening, the levels that I have at that point. I wasn't observant enough. And yet today, I am on the money. Like I'm back. So I'm like, okay, so what do we have? We have this, we have that. There's a massive candle. Do we have a level? No. Do we have this level? 5 minutes, 2 minutes. It was actually a 2-minute chart, Jerobi, but yeah. And again, ODA loops, that's what they're supposed to do. But if you're distracted or if you're trying to do meetings, one of the guys who I didn't manage to make into profitable traders, he's a scratch trader. So he doesn't lose money, but he doesn't make money. One of the reasons is because he's always in calls and meetings. Like I understand that he's got another company and I understand they were going through like a funding round or something. But one of the reasons why his trading never actually did what it was supposed to do was because he was just trying to trade on autopilot whilst doing other things. So, for example, he would be shorting straight into an average daily range, and most times that just doesn't work because you're not going to get a day like this every day. And then he's like, oh, no, I think I bolted it up. Oh, there's a thing. And I'm like, well, where's your head, man? Like, what happened there? And he's like, I'm sorry, I was on a call. And the amount of times that he said that, every time crappy trade was done, or he noticed after the fact that he would be in a trade and he's like, oh no, I just noticed I'm going against the value acceptance here. Or, oh my God, I'm doing a C or weeb trade, and yet we have value high reversal already. Like, what am I doing? And I'm like, you have to concentrate. So, some people, obviously, trading is not their priority. I think that's changed. Like, he was actually one of the first guys on the gold. And, so I think the quality of the people that I have now, they're a lot more invested. They know what to expect because, now I've had over 300 people that I've worked with. And I've done these kind of sessions. So they sort of know what to expect when they come to me, what sort of process we're looking at. I also explained that in the calls with them. But yeah, focus, you can't replace that. If you don't have focus on the day, it's better to just go and do something else. Like, come back tomorrow. Marcus will still be here. Obviously, I have obligations with my YouTube channel and content creation. So most of the days I can't just fuck off and do nothing. So I still have to turn up and I still have to do a session. On most sessions, you guys have seen that I am pretty clued in. But, you will have life happening every so often. And D is going to be all over the place. D is going to be the space cadet on that day. And also, talking and trading, exceptionally difficult. I still find it challenging, guys. So I'm not going to sit here and just say, hey, yeah, I trade perfectly when I've got fucking bright lights in my face and I'm trying to concentrate with this and that. And then today I had like a whole bunch of stuff that our CTO gave me. And it's like, do this, do that, do that. So I'm like, okay, I'm right. So sometimes my memory is a little bit at capacity at this point, but I think I'm still doing okay. And I'm guessing the more that I do trading online, live, I am going to get more comfortable with it. Because like anything, you learn. and your energy pathways get used to doing the new things. I mean, when I first started doing YouTube, guys, you remember, I don't know whether you remember, but if you go all the way back to my very first video, I was so awkward. I was so awkward. And like, I tried to prepare a script and everything, but I just went off script, like literally within the first 2 minutes. And then I did manage to get a little bit more comfortable by the middle of it, but I was still very awkward, you know, and I remained awkward. I think even now with parts of this thing, like audience interaction, sign-offs and all that, I still find it very, very odd. Like, I don't like it really, but you have to do it, because I've noticed when I was telling people to sign up and to switch on notifications, we used to get like a whole bunch of people signing up, and I stopped doing that because I was uncomfortable with it. So for the last, I don't know, about 10 long form videos, I just haven't done it. And yet, obviously we have gone over 10K, but since I stopped doing the audience interaction, I've noticed a drop in my signups on the channel. So I'm like, that needs to come back in. Well, it wasn't me, it was my CTO. He said, why aren't you doing audience interactions? I'm like, why don't you do audience interactions? But yeah, so there you go. Rant over. Like, don't get me wrong, I've worked with cameras most of my life as a musician, but talking into a camera is the problem. Not anymore, obviously. I've gotten used to it, and I think I've gotten a little bit better. But I still have moments where I have problems signing off. Like, I try to sign off, and then I remember I needed to say something else that I forgot. And then I gotta go back, and I'm like, oh, God, I didn't say that. Oh, shit, what's my sign-off line? And then I balls it up. You know, sometimes I say, oh, be less grasshoppery or muppety, or be less muppet, more market stalker, or be less muppety, more market stalker-y. So yeah, I hope you guys appreciate everything that I do and my awkwardness. But yeah, you know, you can't be a nerd and be super, super comfortable with presenting. So yeah, something's gotta give, man. I'm not that great, Ray. I'm not that great. Thank you for saying that. I'm just alright. You know, I'm a good trader. I know that much. Presenting, could be better. I was actually, before COVID, I was actually due to go do a course on presenting, but COVID hit, and then I never did it. Maybe I should go back. If they still exist, because a lot of people went out of business, obviously. Right, just gonna have a little gander at what's going on the low time frames, ODA loops. Right, higher high on a 15-minute chart. Yeah, a lot of growth. Yeah, I mean, I've definitely grown from that first video, and even from the first serious video that I've done in around March 2020, when I decided to do like the more dynamic stuff, when I actually took YouTube seriously for the first time. Because before then, I didn't really, you know, I was just doing it for the people who were already funded in our company. So I was like, yeah, let's just do like a weekly strategy overview. And then other people started finding that helpful. So for years, I just did the weekly strategy videos. That was it. And I was really serious when I was talking. There was no humor whatsoever. So I have relaxed a lot, you know, I've grown a bit more comfortable talking to myself effectively, but it's also because I know that now I'm not talking to myself, because you know, you guys are here and I have so many other people who watch the videos. So now it's kind of like the camera represents you guys. It represents, you know, the people that I'm talking to. It's not just a camera in a room and Dee just talking to herself like a lunatic. So that part makes it easier. I think the fact that we have a community and that it's growing, obviously. So you do get, like, you almost like the community takes on a personality. So when I'm talking to you. I'm not just talking to the wall behind my ring light. Yeah, I mean, Ray, you've been with me for a while now. It's coming up to what, 3-4 years? Because you were one of the first guys as well. Yeah. Yeah, see, Ray has been with me since about 2019. So him, Tech Addict, Jeff, he comes in here so often, and Haluk, you guys were my like first online proper like apprenticeships, because before I did do trainings, like I did trainings with Tim. Tim used to come to my house every day, and I met Tim in 2014, I think. Yeah, 2014, and then he started realizing that he wants to learn from me. So then we got friendly, and he came to my house, and he was like, okay, let's learn. So him and my Yana Pankratova, my late Yana, they used to come to my house, and then I used to teach them. So the same thing that I'm doing like this, but it was actually live with 2 people in front of me. And then before that, in prop trading companies, whenever I did an interesting trade, well, this is how it went. Every time somebody would walk past, I would be in some sort of profit. And then there was this one like little intra office competition that we did, and I won it. But I was sick as a dog. Like, I came into the office, I was coughing, spluttering, I probably had a fever, and I still managed to ace it. And then I won the competition by the biggest P&L that they've ever had, and they kind of ran that competition with every new apprenticeship group that they had. So people got very interested in, you know, how I trade, supply and demand levels, average range exhaustions. So at one point I'm trying to trade, and then one person asked me about the setup, so I started explaining it, and suddenly at one point I look around, and there's like literally like 12 people around me just going kind of like, yeah, okay. I was like, dude, I'm not a mentor. Like, seriously, I'm just, you know, I'm here to learn as well. And they just found it very, very useful when I started to match up market profile that they were teaching us there with the stuff that I was already doing as a swing trader. So they were just like, oh, wow, this is so different. Like, what are the boxes? There's one of the questions. What are your boxes doing? Like, what is the significance? Oh, Jeremy. So here's the little story. In 2007, I started getting interested in trading because I worked as a musician in the city, and I lived there as well. So I lived in East London. I lived, for those of you who are from London, although I don't know where the Claudio is around, I lived near East India Quay Station, one of those yellow buildings. I had a flat there. And then I used to go out, like after my gigs and stuff, or sometimes I would go to the wharf for dinner. And inevitably, I got friendly with a lot of the traders who were working in the city, because there's a lot of banks there. It's got the city of London is the financial center of London. It's kind of like Wall Street of London. And I started talking to one of my friends, and he said to me, so you're just a musician? And I'm like, well, yeah. And he said, well, you seem to have like a natural intelligence that I just don't have. So, I mean, if I can do trading, you'll probably smash it. And I said, oh yeah, but I wasn't very good at maths. Like, I find it really boring. So I don't think I don't think I could do that. And he said, no, it's not actually about maths. Like there's a bit of calculations and stuff, but he said, no, it's very visual. So this is why I think, musicians traditionally they're good traders. And I'm like, are they really? And he said, yeah. So he started talking to me about it, and I got really interested. I was like, really? What? Patterns and stuff? So he had a laptop on him. So he opened up the laptop and he showed me the candlestick charts, which I've never seen before. And I was like, wow, what are those? They look like notes, like musical notes. And he said, yeah, blah, blah, blah. So he started explaining it to me. And immediately he actually introduced the concept of a good versus bad trade location, swing extremes. It all went a little over my head that first time. But then I said to him, okay, give me a little bit of time to kind of look into it myself. The thing is, it was a night out, so, we all had a bit to drink, and, still drinking quite a lot back then. So I was like, just give me time when I'm a bit more sober. to actually process all of this. So the next day I got obsessed and I started Googling as much as I could, but there wasn't that much stuff out there back then. There was like a concept of institutional order flow, but it wasn't, it really wasn't anything the way they were teaching it. It was more like, oh yeah, here's a high, here's a low, and you just, just whack a limit order and, you know, set and forget sort of thing. So I was like, set and forget. I'm not sure I'm that comfortable with it. So that first year, 2007, I tried placing my first trade. I used NinjaTrader, which was a broker back then. And I remember I just put in like, I put in like $400 or something, or pounds, 400 pounds. And of course I put it all on one stock. I didn't trade this sort of stuff, I traded stocks. And I put it all on Intel. Now if I had known what was to come in 2008, obviously I would have made a killing, but obviously that particular week it went up and I carried on holding it, right? So I went like $4,000 or no, 4,000, was it in pounds? I can't really remember, it was such a long time ago. But anyway, it's like $4,000 of something. And I thought to myself, oh wow, okay, so 2 hours has been reached. Let me just take this off. There we go. 28 grand, not bad. I actually took that off at near 2.4R, which is awesome. Okay, close, 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 and close. Okay, good. And then after that, in 2008, I decided I'm gonna get into trading, like properly. Sorry, somebody's just putting dog food into the freezer that I hold in my office casually. Because London and Victorian houses. And I'll continue the story without the soundtrack. Is there more to come? Ah, okay. All right. So I'll talk in between the dog food arriving. So yeah, and then 2008, I decided that I was going to take it more seriously. Why? Because I had swine flu. It was the summer of 2008, I think, and swine flu broke out. And then we also had the credit crash, like the whole thing. So obviously the markets came into focus very heavily. So now I already had this idea of like supply and demand, highs, lows, whatever, but I wasn't really familiar with candlestick patterns or anything like that. So it wasn't really until 2008 that I started really practicing. And then I spent 9 months, once I learned the concept, 9 months trading on a demo. So there was no live trading, nothing like that. It was all just 9 months of pure real-time demo. Once I had an idea of what I'm doing and how to behave, I decided I was going to put a whole 2 grand into my account. There were no prop firms back then of the sort that we have now, so that you couldn't just sign up online. If you wanted to go to a prop firm, that was another thing, which I did several years later. But I first started as a swing trader, and I only, at the advice of my then friend / mentor, I started only trading one thing. So I focused on euro dollar, because Forex was big back then and it was a lot of movement. Forex died a death later on, which is the reason why I went into prop trading and switched to like crude oil and this sort of stuff. But back then I did really well. So for about a couple of years, obviously I had one mistake, which I've talked about in the whole program. Sorry, not in the program, on YouTube actually. It's a YouTube video where I lost 70 grand. So I made 70 grand and then I lost it all. After that, I vowed to myself that I will never do something stupid ever again. Tightened up all my risk limits, made sure I go to the gym before I traded. And from there on out, I actually managed to make, well, back then the pound and dollar exchange was pretty significant. So I managed to make like just under $500,000 of my own money in 2 years. So that's why I was like, maybe I can be maybe I can do this for a living. And around about that time, I decided that I'm going to run my trading and my music career parallel. So every so often, I was still doing gigs. I was still out of the country like 3-4 times a week. More dog food. We have the ASMR of dog food going into the freezer. And the door opening and closing with a gentle squeak. Yeah, so after my swine flu situation, I thought to myself, because the fees started getting affected. So I was like, why am I doing this? Like, why am I jumping around the world? And with my career not really advancing as a musician, like, what the hell am I doing? Is this really that important to sacrifice my health? And I was coming up to about 29 years of age. So, you're kind of losing the energy that you had when you were 19. And even when you were 20, 21, 23. So it was difficult. Like the air was always dry in the plains, and I was getting sick all the time with little colds and then also swine flu. My diet was disgusting. I was probably about 10, 12 pounds heavier, maybe even more heavy than I am now. Weirdly enough, I probably weighed the same amount now, but I looked really different. Like I looked a little bit chubby back then because I was a musician who ate like Burger King and lots of carbs, and I just didn't take care of myself at all because it's very hard to eat properly on tour. You just eat whatever they give you. So, and whatever they gave you, especially back then, it wasn't particularly nutritious. So you would live off sandwiches, chips, all the bad stuff, not a lot of real food in there. So that's obviously why my health was going to crap. I was overworked, tired all the time. My immune system was low. And then suddenly I was making all this cash that I could never really make as a session musician. Like I did really well as a session musician, but this was like next level, man. Like there was no way that I could make $500,000 as a musician in 2 years. No way. So that's why I was like, okay, I think it's time to say goodbye to my music thing. And I focused all of my efforts into trading my account. And that worked until 2012. So 2012, something happened. The interest rates started coming back down. European austerity measures were introduced. The whole Europe was bailing everybody out. Like Greeks were going bust. Italians were about to go bust. Germans were saving people. It was terrible, right? But the interest rates were lowered to the point that there was no interest rate differential. It was just all very close to zero. And at that point, Forex died. So I knew that my skills either had to grow or I had to move the markets like that. By then I was already, like, I wasn't stupid. I was like, yeah, look, I was tried like for a year and I've remained scratched. Like, what the hell's going on? So naturally I had to recognize that the strategy that I was doing back then, which is swing trading through supply and demand and Q points, was just not working for me anymore. It just, it stopped working. Because there was no momentum. Like even for these strategies, you still need momentum, man. Like you can't not, even if it's a range bound day, you still need to have at least like 100, 120 takes to be able to generate a profit. If you don't have that, it's pointless. So yeah. And that's when I got the idea to go into prop firms and try to learn intraday trading, and the rest is history. So now we're so lucky. Like we have these online prop firms. You don't have to go anywhere. You just and you don't have to pay like apprenticeships of like anywhere from like $4,000 up to 25 grand. You just pay the assessment fee. You get access to all the educational materials. Quite often you get access to people like James and Steve from Trade Day. They're very good. So you become their funded trader. You can like literally badger them every day. You can cry on Steve's shoulder, and you can talk strategies with James if you're struggling with that part. So they're kind of like the old style prop firm, but online, with two really experienced people for mentors. So yeah. And I think a lot of traders who were coming from back then, we all had like a very similar path because there was no other path to take. You had to go through some kind of a physical apprenticeship somewhere to learn a lot of this stuff. All right, let's have a look at what's going on with gold now that my crude oil trade has smashed it. Oh look, continuation from post and current range might be on our hands. Yeah, WD-40, thank you. So basically no more squeaking of the doors. That's very good, yeah, okay. I don't know why that had to happen during the live stream, but there you go. Alright, so idea for a gold trade. This is probably gonna be extended into the day range fill now. But we do have a little bullish engulfing here. Potential for P-shaped day, so again, not too much of a range, so I might try and skim another 1R. I'm gonna go long, so no day range fill. Day range fill means day range continuation for today. Okay. Slightly thicker market on gold means that my orders will probably be respected. Okay. Oh, I see there's a second part to your question, Jeremy. So trial and error, or did you have a mentor? No, I always had mentors. So I wouldn't be able to do everything by myself. You need a starting point. You need somebody to take you by the hand, show you the levels, show you what is the right way, what is the wrong way. And I'm very open to having mentors still to this day. In a way, even Rod Casilli is my mentor in many ways because he is somebody who's more experienced than I am. And while his way of trading is a little bit different than mine, I still took a lot away from the way he approaches his levels and his trading. Even though our levels end up being pretty similar, and I have a much more structured approach, there were still a few things that I quite liked in his approach. And then before then, I had, if we go backwards, so there was Hogue from Top Step, and then before then there was John Garrity from Infinium, yeah. I don't think they exist anymore. They were a Chicago prop firm. So yeah, so I always had people that were my mentors that have been doing trading for a lot longer than I have. And then I just literally observe, I ask a lot of questions, and I do trial and error as well. I never take anybody's word like as some kind of a, religion. I will always be like, okay, so value high. For example, Hogue was like, oh, value high is a pretty good area for a reversal. And I'm like, is it? I'll test that by myself. And he was like, yeah, of course. When we were talking about value area acceptances back in the Chicago firm, people were like, oh yeah, but value acceptance, you need 2 TPOs. But every time I was observing the value acceptance, 1 TPO close was all you needed. This is why I have the method, because I didn't take everything that they told me as like, oh yeah, that's the end. That's how it is. I tested it, took the parts that worked. I evolved the other parts that I felt could have used a tweak, like they were useful. They just didn't quite resonate with the statistics that I was having. And then I came up with more stuff, right? So I came up with the average session ranges. I came up with Sieb and Weeb. I came up with my version of a mean reversion versus Dalton's. And I effectively turned the whole wishy-washiness of order flow strategies, which are very discretionary in their original form. And I turned them from like Dalton kept saying, oh, it's an art, it's an art. It's not an art, it's data science. And data science doesn't mean that, oh yeah, we have one key level, and if it doesn't hit that key level, that means that level is not working. It's a zone. So if you look at everything as a zone and you give it leeway, suddenly it's not it's not art, it's data science with a percentage of variability, right? So if you have a zone that you're looking at rather than one key level, things look very different. So even if the ADR gets overshot by about 105% and then turns around, that ADR level is still reactive. But if it gets overshot by a bazillion%, anything over 25%, that's an abnormal day. Again, not art, it's science. Quantifying things the way they should be quantified. And not hiding behind, oh, trading is an art. Ugh. Jeremy, for now, yeah, it looks like I probably will be mentoring. Like, I was very sick throughout last 18 months. Like, you've been here every day, so you know that on a lot of the days I could barely get out of bed. Well, I am in remission now, so if anything, if I continue to, as one of my doctors says, to remain in my energy envelope, which is a very good way of putting it, I don't see any reason why I wouldn't even ramp up the mentoring the following year, since I've massively cut down on the mentoring that I was doing in the previous 18 months, because I just couldn't handle it. So I usually I used to take on about 4 to 7 new people a month. And then since this stupid illness has hit me, I could only take on a couple of people every 3 months. Like, that's all I could handle. So in 2024, again, I should be a lot more recovered than I am now, because I still can't go to the gym. My energy levels are still kind of touch and go. I take a lot of medications and supplements in one day. However, by 2024, I should be even further than I am now. So I don't see any reason why I wouldn't take on more people. Now ask me in about 10 years, I'll probably retire and there will be no more mentoring. So, you know, even maybe in 5 years, you never know. I might feel like I don't want to do everyday trading, and I'm still thinking of creating some kind of a prop trading company that will be accessible to everybody rather than just having closed gates, which is what we have now. But yeah, we're still kind of working out how that can be possible. There could be a moment where we might have to wind down Blahtech and Market Stalkers and then create a brand new entity. Because right now, the way we're set up, we can't really fund regular retail traders. I mean, if it's all on a sim, I could maybe do that. But we've always funded people with like live money and stuff. So if it's all on a sim, we could probably work around the regulatory problems. But if it's live, then the current rules have to remain. So it has to be professional qualifications from a relevant body and active membership. And then it has to be 3 years of a successful track record as well, audited. So without that, it's at the moment, the way we're set up, I can't take on anyone. But yeah, we're working out a way by which we could make, the Market Stalkers prop trading company possible. And that's one of the reasons why I started with the courses. I wanted my own traders. And then I didn't realize when we took on some investments from a friend of ours, when I first started this, he was a trader friend. I didn't realize that's going to come with a whole host of problems. So yeah, we'll see. We are still working. But yeah, mentorship, I don't see a reason why I wouldn't be doing the mentorship in 2024. So I'll keep you in mind. All right, guys, that's it. I'm going to wind this down. I mean, I'm going to keep an eye on this trade on GC. If it's not really moving much in the first kind of 10 minutes of day range fill, I'm going to just close it and call it a day. I managed to get 2.4 R on this crude oil trade. So all good. Like I said, It was a very quick, interesting trade. And that'll be it. Drama free today. So yesterday's emotional trading, completely over it. Everyone's alive. Onwards and upwards, right? Okay, guys, I'm going to sign off now. Again, problem with signing off. Bloody hell. Let's try to be less, what do I say? Less Muppety and more market stalkery with every single day. And I will see you guys on Monday.